Trading is more than just analyzing charts and following strategies. It's a mental game. Many traders, especially when they first start, focus on the technical aspects, trying to master indicators and chart patterns. But the real shift happens in the mind. What separates amateur traders from professional traders is psychology. When you start trading, you're excited. It's all new, and you believe that if you just study hard enough, you can crack the code to consistent profits. But soon, you'll realize that the market doesn't care about how much knowledge you have. It only reacts to your actions. And if your actions are driven by fear, greed, and impatience, you'll quickly find yourself on a roller coaster of emotional highs and lows. This is where the transformation from an amateur to a professional happens, in your mind. The key is not to become emotionally attached to your trades, but to develop emotional resilience and mental discipline. Let me introduce you to Alex, a trader who went through this exact transformation. Alex started trading just like most amateurs, with high hopes and a desire to make money. He learned the technical analysis, followed the top traders on YouTube, and even paper traded for a while to build his confidence. When he finally opened his live account, he felt prepared. He had a strategy in place and thought that if he just followed it, success would come. At first, things went well. Alex was making small, consistent profits, and it gave him a sense of pride. But then, the inevitable happened. He hit a losing streak. It wasn't just one or two trades, it was several losses in a row. His confidence began to erode. Instead of sticking to his strategy, Alex started making impulsive decisions. He would chase the market after it moved against him, hoping for a quick win to recover his losses. The fear of missing out led him to break his rules, over-leverage his account, and trade emotionally. Soon, his account was severely damaged. This was the moment Alex realized something had to change. He was still using the same strategy, the same risk management plan, but he was letting his emotions control his actions. The strategy was fine, but his mental state was causing him to fail. This is where the transition from amateur to professional trader begins. It's not about changing your strategy or techniques, but about changing your mindset. After Alex's wake-up call, he realized that his biggest obstacle wasn't his lack of knowledge or skill. It was his inability to control his emotions while trading. Emotional control is one of the most critical components that separates amateur traders from professional traders. Let's dive deeper into why emotional control is so important and how it can elevate your trading. As a beginner, you're bound to face losses, and that's one of the hardest truths to accept. The reality is, every trader loses, even professionals, but it's how you react to these losses that determines whether you'll continue to succeed or eventually quit. Let's look at Sarah, a trader who went through a similar journey. Sarah was a seasoned professional in the corporate world before transitioning to trading. She had a background in finance, and she assumed that with her skills and knowledge, she'd easily make the leap. But trading was different. No matter how prepared she was, she found herself falling victim to the same emotional traps as Alex. Sarah had a good system in place. She understood her strategies, her risk management plan was sound, and she knew exactly what she was doing. Yet, whenever she experienced a loss, it shook her confidence. The fear of losing money would take over, and she would start doubting her own judgment. She'd second-guess her strategies and feel frustrated. This emotional roller coaster would lead to impulsive decisions, taking trades that weren't aligned with her strategy or chasing after the market. These emotional actions often led to more losses. This constant cycle of fear and frustration was draining Sarah, and soon she realized that to break this cycle, she needed to stop viewing trading as a way to make quick profits and start focusing on developing mental discipline. She needed to embrace the fact that losses are part of the process and that she had to manage her emotions if she wanted to make it in the long run. This is where professional traders differ. They don't get emotionally attached to their trades. When they experience losses, they don't let it affect their next trade. Professional traders understand that each trade is a small piece of a larger picture. It's about consistency over time, not the immediate outcome of one trade. One of the first steps to becoming a professional trader is identifying your emotional triggers. The market is designed to test your emotions. It tempts you to react emotionally. to get excited when things go well, and to panic when things go wrong. Professional traders have learned to recognize these emotional triggers and take steps to manage them. For example, let's look at how Alex started to manage his emotional triggers. After his realization, he began tracking his emotional responses to each trade in his trading journal. He would write down how he felt before, during, and after every trade. Over time, he noticed patterns. Certain trades would make him feel nervous or eager to recover losses, while others would trigger impatience or a desire to over-leverage his positions. By understanding these triggers, Alex was able to put in place strategies to neutralize them. When he felt the urge to overtrade, he would step away from the screen and take a break. When he felt the excitement of a winning streak, he would remind himself to stick to his strategy and not get greedy. When fear crept in after a loss, he would focus on his long-term goals and not let one trade dictate his mindset. This mental clarity helped him stay disciplined and consistent. A professional trader knows that patience is key. Patience isn't just about waiting for the right setup. It's about understanding that not every trade needs to be a win. It's about having the patience to wait for the market to come to you instead of chasing every opportunity. Let's go back to Sarah. After realizing that her emotional responses were controlling her trading decisions, she started working on patience. She set boundaries for herself. If the setup wasn't right, she wouldn't take the trade. She stopped forcing trades and started waiting for the high-probability setups that aligned with her plan. At first, this felt unnatural. It was hard to sit on the sidelines when the market seemed to be moving. But Sarah quickly realized that not trading could be just as valuable as making a trade. Patience paid off. She stopped making impulsive decisions and began building consistency into her trading results. As she practiced patience, Sarah's win rate increased and her emotional stress decreased. One of the biggest challenges for amateur traders is bouncing back after losses. The mental resilience to keep going after a loss is what separates the pros from the rest. Professional traders don't let a single loss ruin their mindset. They know that the next trade is a fresh opportunity and they don't carry the baggage of previous losses into their next decision. Let's say John has been consistently profitable for months, but he faces a losing streak. Most amateur traders would get discouraged, questioning their strategy or even abandoning it altogether. But John, as a professional, focuses on his process. He reviews his trades, analyzes whether there was anything he could have done better, and moves forward with a clear mind. He understands that trading is about staying consistent over the long term, not about winning every trade. This emotional resilience, the ability to detach from a single trade and focus on the bigger picture, is what leads to long-term success in the market. If you can stay mentally strong through both the wins and the losses, you'll have the consistency to keep trading, even when the market isn't in your favor. Trading isn't just about strategies and indicators, it's about managing your emotions and understanding the psychology of risk. For most amateur traders, the initial excitement comes from the belief that quick profits are just around the corner. But over time, the reality sets in. It's not the perfect strategy that will carry you to success, it's your ability to handle the ups and downs with discipline and patience. When Alex started to understand this truth, he realized the importance of embracing risk. He wasn't going to avoid it, but he needed to learn how to control it. As much as the technical side of trading matters, it's your mental state that determines how well you handle the pressures of the market. Let's look at David again. When he first started trading, he was motivated by the potential for quick profits. He thought he could take his small account and turn it into something significant by making big trades. But with every risk he took, the fear of losing his money became overwhelming. David was chasing rewards, but all he was doing was gambling. He didn't understand that trading was about consistent, controlled risk. After a string of poor trades, David began to reflect on his approach. He understood the need for a clear risk management strategy. The professionals knew that trading is about managing your risks, not just finding the next big win. He started setting strict stop-loss orders to limit his exposure on each trade. David was learning that protecting his capital was just as important as making profits. Embracing risk doesn't mean taking reckless chances. It means acknowledging that risk will always be there and managing it wisely. Understanding risk tolerance is an important part of developing the mindset of a professional trader. The risk is inevitable, but how you control and mitigate that risk is what makes the difference. Every professional trader understands that risk is inherent in trading. If you're going to trade, you must embrace risk and accept that there's no such thing as a risk-free trade. What professionals do differently is they manage risk rather than run from it. The first step to becoming a professional trader is to acknowledge that you can't control the outcome of every trade. Even the best traders have losing streaks. But what separates the pros from the amateurs is that professionals understand how to limit their exposure and manage their losses. For example, let's say Sarah takes a trade and the market moves against her. A professional like Sarah would have set a stop-loss order at a reasonable level to ensure that her loss is capped. While the trade may not go as expected, she knows that the loss will be manageable and won't wipe out her account. This ability to cut losses early and efficiently is what allows professional traders to survive and thrive in the long run. On the other hand, an amateur trader might hold on to a losing trade for too long, hoping that the market will reverse in their favor. But this mindset only increases risk and leads to emotional stress. Professionals never let hope drive their decisions. They accept the loss and move on to the next opportunity. One of the biggest reasons amateurs fail is because they don't manage their expectations properly. They might start with a small account, and instead of understanding the importance of slow and steady growth, they aim for unrealistic profits. They want to turn 1,000 into 10,000 in a short time, and when that doesn't happen, they get frustrated and quit. Professional traders know that trading is a marathon, not a sprint. They understand that their expectations should be grounded in reality. Trading is a process, and it's about consistent, incremental progress. Success doesn't happen overnight. It takes time, effort, and discipline. Let's think about John, a trader who had a more grounded approach. When John started trading, he wasn't expecting to make huge profits in his first few months. Instead, his goal was to learn the ropes, develop a solid strategy, and build his account slowly. He set realistic goals, a 5 to 10% increase in his account each month. This approach allowed John to make consistent progress, and over time, his account grew significantly. His expectations were always aligned with the reality of the markets. By keeping his expectations modest, John wasn't chasing after unrealistic profits. He wasn't gambling, he was building. And this mindset is what helped him stay focused during tough times and learn from his mistakes. John understood that the road to success in trading was paved with patience, not quick wins. As a professional trader, your risk tolerance will vary depending on your goals, experience, and trading style. Some traders are more comfortable taking higher risks, while others prefer to play it safe. The key is to understand your own risk tolerance and ensure that it aligns with your trading strategy. For instance, if you're a short-term trader, you might be more willing to take on smaller risks with more frequent trades. But if you're a long-term investor, you'll likely be more focused on risk management and patience, holding on to your positions for longer periods while riding out market volatility. The important thing is to balance risk and reward and to stay within your comfort zone. Understanding your personal risk tolerance allows you to make better decisions and avoid impulsive actions that could harm your trading account. The most important lesson is that risk is inevitable in trading, and learning how to manage risk is essential for long-term success. Embrace risk, but always manage it with the right strategies. Don't let the fear of loss control you. Instead, understand that each trade is just a small piece of the larger puzzle, and consistent, well-managed risk is what will keep you in the game. Embracing risk and managing expectations will allow you to stay focused, disciplined, and consistent. In the end, it's not about winning every trade. It's about surviving the losses, learning from your mistakes, and growing over time. Professional traders understand this. It's time for you to develop that same mindset. The key to professional trading is not just about having a good strategy or a perfect setup. It's about following the process no matter what the market throws at you. A professional trader knows that consistency is the secret to success. They don't get distracted by every market move or let their emotions dictate their actions. Instead, they trust their plan and execute it without hesitation. It's the difference between making money consistently and chasing fleeting opportunities that often lead to emotional burnout. Let's talk about James, another trader who faced a significant shift in his approach. James was well-versed in technical analysis and had spent years studying the markets. He felt prepared when he made the leap into live trading. Initially, he had success, but after a few losing streaks, he started second-guessing his strategies. He found himself trying to catch every price move, jumping into trades that didn't meet his criteria. James thought he could outsmart the market by constantly adjusting his trades based on the market's every move. But this didn't work. His profits were inconsistent, and he found himself feeling exhausted. It was after a particularly frustrating series of trades that James had a breakthrough. He realized that in his pursuit of quick profits, he was ignoring the process. He was letting his emotions and impatience rule his decisions. That's when he came to understand what many professional traders know. The market doesn't reward quick decisions or jumping into trades out of fear or greed. It rewards those who have the discipline to follow their trading plan, no matter the outcome of individual trades. James stopped trying to predict every price movement and focused on executing his plan without letting his emotions take over. He learned that the key to professional trading is not to chase after the market, but to let the market come to you. He no longer felt the need to enter a trade unless the conditions were perfect according to his plan. The importance of consistency cannot be overstated. A professional trader doesn't measure their success based on individual trades. Instead, they look at their performance over weeks, months, and even years. Trading is a long-term game, and the professionals understand that trading today is just one step toward consistent profits in the future. Take Sarah's example once again. She's been trading for years, and she has seen plenty of ups and downs. During her early days as a trader, she used to get caught up in every market movement. She would enter trades out of fear of missing out or desperation to recover losses. However, after some time, Sarah began to develop a consistent mindset. She started to realize that trading wasn't about predicting the market perfectly. It was about following the process, sticking to her plan, and letting her edge work out over time. Sarah would review her performance periodically, but she didn't obsess over every loss. She understood that over the long run, consistent wins would add up. This shift in thinking allowed her to build a steady income over time. Sarah was no longer focused on catching every big move. Instead, she concentrated on executing her plan and improving little by little. Each trade, no matter the outcome, was an opportunity for growth. This mental shift is what makes the difference between amateur traders and professionals. Amateurs focus on short-term wins, while professionals know that success in trading is about long-term consistency. As a professional trader, you'll have losing trades. It's just part of the journey. The key is to learn from those losses, adjust your approach, and continue executing your plan without getting emotionally attached to any single trade. When Alex made the decision to stick to his plan, things began to change. He started to see consistent, small profits, and his trading became more methodical. He wasn't chasing trades anymore. Instead, he waited for clear, high-probability setups that aligned with his strategy. Alex began to trust the process and stopped trying to force trades. His losses still stung, but they no longer shook him to his core. He knew they were part of the game, and he was in it for the long haul. The shift from amateur to professional happens when you realize that trading isn't about big wins. It's about managing losses and letting your system work over time. Professional traders are in this for the long run. They know that the road will be bumpy, but as long as they stick to their plan and stay disciplined, they'll be successful over the long term. The key takeaway from this journey is that success in trading is a product of consistency, discipline, and the ability to control your emotions. When you learn to follow your plan without being swayed by emotions or market noise, you'll find that your trading becomes more predictable and profitable. This is what separates the amateurs from the professionals. It's not about the strategy, it's about how you execute it consistently. The journey from being an amateur trader to a professional isn't just about following the right strategies or even about controlling your emotions. It's about becoming adaptable to the ever-changing market conditions. The best traders know that adaptation is key. The market doesn't follow a single path. It's constantly shifting, and the professionals are always ready to adjust to whatever comes their way. Let's return to David. After his string of poor trades, David realized that one of the biggest mistakes he was making was treating the market as if it would always behave the same way. He wasn't adapting to changing market conditions. Whether the market was volatile or in a range, David was using the same strategy over and over again. The lack of flexibility in his approach made it harder for him to succeed. David's breakthrough came when he began experimenting with different market conditions. He started observing how his strategy worked in different market environments, in strong trends, sideways markets, and periods of high volatility. Over time, he learned to adjust his risk management, position size, and trade frequency depending on the situation. He realized that a one-size-fits-all approach didn't work. He needed to be flexible and adaptable. For example, when the market was trending strongly, David would increase his position size slightly because the risk-to-reward ratio was more favorable. But during sideways markets, when price wasn't moving significantly, he would reduce his risk and be more selective with his trades. This adaptability allowed David to stay profitable even during difficult market conditions. This ability to adapt is something that professional traders do naturally. They know that market conditions will change, and they expect volatility. The key is being prepared to adjust your trading approach without letting fear or impatience guide your decisions. One of the biggest lessons that Sarah learned was that her success didn't come from being rigid with her strategy. She learned that flexibility and resilience were the true drivers of success. Sarah didn't expect every market cycle to be the same, and she didn't force her strategy to fit every market condition. She understood that changing her approach when necessary was a sign of maturity, not inconsistency. At times, when the market was particularly unpredictable or choppy, Sarah would step back and wait for clearer opportunities. This patience paid off in the long term. When the market began to trend again, she would capitalize on the new opportunities, having preserved her capital during the quieter periods. By adapting her approach to fit the market conditions, Sarah was able to navigate the ups and downs of trading with more confidence and consistency. The transition from an amateur to a professional trader also comes with an understanding that losing trades are inevitable, but how you handle them makes all the difference. Professionals don't get discouraged by losses. They use them as learning experiences. Every loss is an opportunity to refine their strategy and improve their approach. Professional traders are constantly evolving their processes based on the lessons they learn from both their wins and losses. One day, John hit a significant drawdown. His trades weren't going his way, and he began questioning his strategy. But instead of panicking, he looked back at his plan. John realized that his risk management strategy had been slightly out of alignment with his goals. He didn't react emotionally. Instead, he focused on adjusting his strategy to improve his risk-to-reward ratios. John took this experience and used it as an opportunity to refine his strategy further. He studied the market conditions during his losses and identified patterns he had missed before. He incorporated this new information into his trading plan and became a more adaptable trader. This is the key difference between amateurs and professionals. Professionals focus on long-term growth and continuous improvement. They adapt to the market, remain calm under pressure, and keep refining their strategies based on both successes and failures. They know that trading is a lifelong journey, and the best traders are those who evolve over time. The amateur, on the other hand, might get frustrated after a few losses or abandon their plan too quickly. Amateurs tend to react impulsively, looking for the next big trade or strategy to make quick profits. But the professional knows that success comes from resilience and staying the course through the ups and downs. The final piece of the puzzle in the journey to becoming a professional trader is having a clear purpose and understanding your personal motivations. Professional traders know exactly why they are in the market, and they have a clear vision of where they want to be in the future. This clarity helps them stay focused even when the market throws challenges their way. Alex, after his struggles, found a deeper purpose in his trading. He wasn't just trading for profits. He was trading to achieve financial freedom, to have control over his own time, and to eventually build a life that gave him more opportunities than a traditional 9-to-5 job ever could. Having this purpose allowed him to stay committed to his trading plan, even during difficult times. In conclusion, becoming a professional trader is more than just learning technical skills or following strategies. It's about developing the right mindset. You need to embrace risk, manage your expectations, control your emotions, and constantly adapt to the market. The transition from amateur to professional happens when you shift your focus from short-term wins to long-term consistency, mental resilience, and continuous growth. If you can do this, if you can embrace the process, you'll find that trading becomes less of a gamble and more of a craft. And that's when you'll truly begin to unlock your potential as a professional trader. Remember to like, subscribe for more.